What's up everybody? Welcome to the Stocks channel. My name is Corey and today we had a very interesting day in the stock market, getting a pullback to close some downside gaps and seeing full-blown capitulation in Tesla stock. Does this mean the Santa rally is now canceled? First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So today in SPY we were down 1.43% and we did close the gap to the downside, which was that gap right around 382. And intraday we did test the critical support at 378 with the intraday low down there right around the 374s. So one very important thing to remember regarding this Santa rally is that it's the last 5 trading days of the year, which is going to start with tomorrow because Monday is a holiday, so we will only have 4 trading days next week. And typically these rallies do go into the first couple of trading days of January. So if we are going to see a Santa rally, we need to hold this critical support at 378. And that is exactly what the bulls did today with the high volume buying near the end of the day, closing back above this critical support. So no, we have no evidence that the Santa rally is canceled. It actually looks more likely than not that it's more likely due to the high volume buying near the end of the day. Now, if we end up being wrong, we're going to see it in the price action and break down below that support at 378. And that is where we're managing our risk. So we instantly need to start thinking something else is happening if we lose support. Below 378, we'll be looking for the market to start heading back down into the 360s and even possibly the 350s. And we will be looking for a more extreme high volume capitulation event. However, you do have stocks like Tesla that are already very likely completing capitulation. And if you've ever witnessed a capitulation event before, that is the worst possible time to sell stocks. When everybody is losing their mind and panic selling near extreme lows at very oversold conditions, typically you want to be a net buyer of those stocks and not panic selling them. Now, does that mean SPY will not go lower? Of course it does not. Anything is possible, and that's why we always follow the price action. But right now, the price action is not telling us we need to start panicking because we haven't even lost support. So I still do think there's a very good chance of a Santa rally that could easily take us up to 387, 390, and then above that will likely go to 393 and close the gap at 396. Now, to make it very clear, that does not mean the bear market is over, because more than likely wherever this rally ends for the Santa rally, we will just get a lower high and continue into the bear market sometime next year, continuing to make lower highs and lower lows. So don't just think the word Santa rally means we're going back into a bull market. That couldn't be farther from the truth. We are still respecting the fact that we are in this bear market in a downtrend, but we have a very good probability that we're going to see a counter trend rally to finish the year. So continue to manage risk right here at this critical support at 378. And then if we start breaking below that and closing below that support level, then we can start getting a lot more bearish for that next leg lower. On the NASDAQ 100 triple Qs, we were down 2.45% today. Obviously, Tesla's capitulation being a major reason why the triple Qs were so weak today. So we did lose that support trend line of support right around 268. Below 268, we could go all the way back down to retest the 52-week closing lows at 260. And as you could tell, we were very close to doing that with today's price action. So there is the possibility we could see lower prices and then still get a Santa Claus rally to finish out the year. So if we continue to break down below this support at 268, you will want to watch for a possible bounce off of that support at 260. Below 260, we're breaking down and the Santa rally is canceled and we're likely coming down to around 250. Now, in the event we start to bounce, look for resistance around 268, 274, and then that target up there at 280 and the gap fill at 283. And the 280 to 283 resistance zone is still going to be the target for the Santa rally, assuming that we don't break down below 260. On the Dow Jones, we were down 1% today, and the Dow Jones came all the way back down to that critical support, which was down here right around 327. And we did see a very strong bounce to finish the day, closing all the way back over the 50 EMA. If you just think about this, the bears did not want the Dow Jones to close above support because that is only making their job more difficult if they're trying to drive prices lower. So this means the bulls were stronger than the bears near the close, and that is why we saw such a strong close, and that is why the daily candle looks like a hammer. So with this hammer candle, you now need to look for possible strong support in the Dow Jones at 330 and down here at this closing low around 327. Below that, the last strong support is 325 because below that, we're very likely continuing into the bear market and going for that next leg lower, which could take us all the way down to 311 or lower. Now, upside resistance to pay attention to is going to be right around 334 and the gap fill right around 337, because that is very likely where the bulls will be trying to go before they find strong resistance from the bears. On the Russell 2000 IWM ETF, we were down 1.31%, and again intraday we were making brand new daily lows, but we saw strong buying near the close, and we did close above this critical support at 172. Below 172, we'll be looking for the next leg lower in the 160s, but if we hold above 172, we could get that Santa rally all the way back up to close the gap around 179, even though on the way there we will have strong resistance at 176 and 178. On the ARKK ETF, we were down 3.39% today, and we're obviously still well within this bear market in the ARK ETF, and we did hit our next downside price target at 31.3. Below this level, we'll be looking for the next target down here at $30, and I do think we are getting very close to what could be a temporary bottom in this ETF, because I do think Tesla's capitulation has a lot to do with these lower prices. We're not getting the high volume panic selling in the ARK ETFs like we're getting in Tesla, so I do think we'll hold up above $30 or 31.3 and then start back up on a counter trend rally up to about 34.6. However, we're still in the bear market while we're making lower highs and lower lows, so we need to break all the way back above 38 before we can get bullish. On the VIX, we were up 9.57% today, and the VIX continues to bounce off of this level at 20 all year long, and yet again we see it happening here. Remember, low VIX means the bears can load up on cheap insurance, which is those put options, and we continue to see that happening again and again. However, this time is different because this time while the VIX is reaching 20, we are closer to support, and in the past when the VIX has reached 20, we have been closer to resistance. So this is different behavior than what we've been seeing all year long, and this could be hinting that we're going to get the Santa rally. Now, in the event the VIX continues to spike higher and we break through support, you need to throw the idea of the Santa rally out the window, because that will be a very highly volatile bear market that could go much lower. So watch the VIX very closely, because with this tall tail on the top of this candle, we are seeing the VIX getting crushed from today's highs, which could mean we have just now started the rally, and in that event we should see the VIX crushing down below 20. On Bitcoin, we're currently flat on the day, only down 0.16%, but still below that negatively sloping 20 moving average of resistance at 17,000. Critical resistance will remain 17,000 and 17,550, with the critical support just below at 16,000, because if we break that, we're going for the next leg lower at 14,395. On Amazon stock, we were down 3.43% today, making a brand new 52-week closing low, and we did break back down below 86, which means we're more than likely heading down to $80 and then 77. Now, one thing to note is breaking down to 52-week lows is usually going to be associated with high volume selling, and so far we're not getting that high volume selling below 86. So do not be surprised if we can find a strong support on the way lower and then get a bounce back up towards about $90. We need to break above 91 and 97 to break out of this downtrend. On Microsoft stock, we were down 2.55% today, and Microsoft lost two critical support levels at 242 and 240, and it's trying to close this gap down here right around 228. You can see we started to push on the gap intraday, but found a bounce near the end of the day. So in Microsoft, you want to be expecting the gap fill at 228 while we're below this resistance at 242. On Nvidia stock, we were down 7.04% today, and Nvidia lost that critical support at 156, which means it's going to be trying to fill the gap at 142. Below 156, we're heading lower, and if we break back above 156, we still have strong resistance around 162 and 167. On Tesla stock, we were down nearly 9% today, and intraday at one point we were down 10%. On extremely high volume, so there is no doubt that Tesla stock is seeing that full-blown capitulation. Remember, this is a retail favorite stock that has a lot of retail investors, and if you look at this stock, retail is still the top two holder of this stock, so they are definitely the ones getting hurt the most by this very high volume sell-off, and they're definitely losing a lot of money, questioning whether or not they should hold this stock, and that is why we are seeing capitulation. This is full-blown panic selling, and that's why you're seeing such high volume selling, and this is extremely high volume selling with Tesla's volume all the way up there over 206 million today. Now you can see from the chart that I do have that Santa Claus rally taking us back up to about 167, but the lower we go, the harder it's going to be to hold this stock, because you are going to start panicking and you are going to start getting emotional. All I can tell you about capitulation is that these are typically V-shaped events, and once they find their bottoms, you will usually come back with a V-shaped recovery, and you will still get a very good exit on this stock. but you need to manage your own risk and you need to decide what's right for you. More often than not, when you see capitulation, you want to be buying the stock and not selling it. And I did add another price target to the downside below 130, which is going to be this level right around 117. Whether or not 117 holds up as support or whether or not we bounce immediately and start closing back over 130 is to be determined, because you never know exactly what's going to happen during capitulation. It's a completely irrational event of panic sellers, and the high volume selling is very difficult to reverse until we finally catch that bottom and we start seeing high volume buying coming back into the stock. So just remember, this sell-off is not sustainable and we are very likely going to see a strong bounce once it's over with, but we have no idea where we are going to see the end of this selling. We could have seen it today, or maybe we're going to see more selling tomorrow. Nobody is going to know that for sure. So watch that downside level at 117, and if we start to bounce, I do think we can get all the way back up to 155 in a hurry. On Apple stock, we were down 2.38% today, and Apple did get rejected from that 5 EMA of resistance around 135, and we're right back down towards this critical support around 132, which was the previous daily closing low. Now on Apple stock, if I zoom out here, you could see that critical support is going to be this level at 130, because if we start breaking down below 130, we are going to see a lot of people jumping out of this stock as it's breaking down to 52-week lows. With a market moving name like Apple, that is going to be a very bearish event for the rest of the market. So this is going to be a very critical support for Apple right here at 130. If we bounce off 130, we're still looking for resistance around 135, and above 135, we're looking for a run back up to 141. On the financials, we were down 0.88% today, and we're still below all of the moving averages, and we still have that strong support just below at 32.8 with the gap to fill to the upside at 34.5. On the industrials, we were down 1.27% today, holding up above the 50 EMA and the breakout of that resistance trendline with a gap to fill to the upside just above 100. The healthcare sector was down 0.14% today, still holding that support at 135 and still has a gap to fill at 137. The energy sector was down 2.3% today, rejecting from the negatively sloping 50 EMA and still holding the support at 84. If we lose support, look for the next leg lower down here at $80. So jumping back over to the S&P 500, while we are above this critical support, the Santa rally has not yet been canceled, but if we start slicing through that support, we need to instantly start expecting that something else is happening, and we could be seeing the market trying to go through some type of capitulation. I don't think we're going to see capitulation because there's just way too many people that are prepared for it, and we are seeing record amounts of put options being purchased, which is exactly why the market will likely not crash. That doesn't guarantee it won't crash, and that doesn't guarantee you shouldn't be prepared for it, but don't necessarily think it's going to happen. Let the price action prove it by losing this support and seeing that high volume selling. Also, don't forget I have Bank Trade Alerts, which is an algorithm driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. If you want to learn more about Bank or want to subscribe, you can click on the link in the description of this video. If you're looking to become a better price action trader, come join us over at the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.